Okay, good afternoon, everyone, and welcome to the innovation stage for the afternoon. My name is Joe Haslam, professor at IE Business School, and I'm here to welcome you to the innovation stage and to present the speakers. So I have the next panel is Tech Ventures in Emerging Markets, and I have the great pleasure to welcome two friends of mine. One, a very old friend, and the second is a very, very new friend. So Annick, if you could come on the stage, please, and also joined by Stella. And they're going to talk to us about tech ventures in the emerging market. Annick has long experience in the tech ecosystem, dealing in IE Business School with the Venture Lab. And Stella, if you'd like to come on board. Stella is Korean, and as well as speaking wonderful Spanish. She is also Korean, so she's going to be here to talk with Annick. So without any, I will leave them. So could I ask you for a round of applause, please, to welcome Annick and also Stella.
Thank you so much for that, Joe, and thank you for being here. I know it's a new conference here, South Summit, and everybody's still trying to figure out, but smaller audience are good because you get to hear more what we say. I have the great honor to have Stella on stage. We already figured out that we have quite some similarities. We both lived in the US, we both lived in Spain. Her Spanish might actually be better than mine. Stella, to start off, could you share a little bit about what you do before we dive into the details of that?
Yeah, sounds good. Is everybody, the sound is good. The sound is good? Yeah? Okay. All right, well, first of all, thank you very much for having me here, both for Annick and the organizers of South Summit. I think this is the first edition of South Summit in Korea, but not only in Korea, in the Asian region in general. Since I've been investing in startups and VC in the Americas before I came to Korea last year. And I knew South Summit as a very, very important conference in tech and VC in LATAM. So very excited to join this first edition. So my name is Stella. I'm an investment principal at Orbit Startups. We are a seed stage, pre-seed and seed stage VC firm. We're part of a global VC fund consortium called SOSV, which has been named actually the most active in terms of numbers, in terms of investments by CB Insights in Q2 2024. Myself a little bit, I joined Orbit last year, so quite recently. Before that, my career in venture capital has been actually quite diverse. I started out as a startup founder in New York City for fintech. We did remittance tech for about 2 years. Didn't go very well. So I switched gears to a venture capital firm in New York and Mexico. That's when I started really investing in Latin America and America, sort of the emerging markets angle. A couple of years after that, I actually got hired by the Latin America arm of the World Bank. So the World Bank started investing in funds and also investing directly in Series A and B startups. So out of DC, I was investing across emerging markets. And recently, I joined Orbit to come back to very, very early stage companies from pre-revenue to monthly revenue of around $10,000 to $50,000. And it's a completely very, very dynamic stage. So very much enjoying that. A little bit more about Orbit Startups. So we, as I said, focus mostly on emerging markets. Our first ticket size, just to give you an idea, is $180,000. It's a standard ticket size. And then we obviously look for follow-ups. We currently are closing our third fund, but so far we've invested in about $80 million with AUM of around 210 at this point, $million. But so you understand, after investing around $80 million, our companies have raised over $720 million, so a little bit less than 10x in subsequent funding. So we really, really help our companies, build, scale, and raise subsequent fundings as we go in very, very early. And we actually have a very diverse geographical portfolio, including Korea. We have about 9 companies in Korea as a portfolio, but in general, our geographical operating market distribution is over 20 countries. So yeah, it's a truly global emerging market fund that goes in very, very early, looking for early stage founders.
So, with that experience, I want to dive into the early stage investment. We have a lot of aspiring entrepreneurs walking around here. and one of the biggest things that they always have, they need funding, right? So for somebody that works for such a successful fund, because 10x is quite all right on the turnover, what are you looking for in early stage startups that you can see the potential? Like how do they differentiate from all the entrepreneurs out there?
Right. This is a very important question, and the number one question that we are asked all the time, right? And across different markets. I'm going to first give you the generic response, and then I'll give you the insider response. The generic response you will hear, which is also true, is number one, team, and number two, market size, and number three, traction, right? I mean, this is the basic. Number one, team is, obviously, do you have the network? Do you have the capacity? Do you have a team member that can complement your networking experience? Obviously, right? If you are founding a deep tech company, but nobody has an engineering degree in that particular area, how are we supposed to believe that you're going to make whatever you're trying to make, right? Number two, but then on top of that, there is this thing that's very qualitative called the vibe. This is why accelerators and early VCs teach you how to pitch, right? At the end of the day, early stage is really more art than science because it's still idea in the becoming. No matter how many numbers you give us, more than 50% of it is going to have to involve my qualitative judgments. So you got to create that vibe with the investor that you're talking with, and it's really an art more than the science. So we want to be able to double check this team whether or not this vibe is there, and we can talk more about that later. And then obviously the market and the product, right? The market I'm talking about, it's very interesting because this depends on which geography and an infrastructure you have. You're a Korean founder, you want to build something in Korea, it's a very different market than I am looking at versus you're a Korean founder that wants to go global, or you're a founder from India, or you're a founder from the US. Very different market characteristics that a VC would look at, depending on if I'm a Korean VC or an emerging markets VC, or a Silicon Valley VC that only looks at the US market, right? Just to give you a very general example, a global VC, or let's say an American VC, right, is looking at a minimum, let's say I'm going to seed stage, a minimum $300 million acquisition exit. That's like an okay exit, because I want you to be a billion-dollar company that goes on NASDAQ. A Korean VC would love that as well, but they'll also be very profitable if it's a $300 million Korean IPO, right? So there's a different type of, idea of the market sizing depending on the investor that you're speaking with, depending on the market that you're trying to operate in, right? And number three is, I can't emphasize enough, traction, right? What is it? Give me your numerical evidence as to why this idea is something that's going to work, right? And if you're a seed stage company, obviously number one traction is some kind of revenue, right? If you have recurrent revenue pipeline set up, that's number one. Cash is king. But number two, sometimes depending on your business model or where you are, you don't always have cash. Then show me something else, like number of users, number of retention, number of stickiness, interaction, something meaningful, right? So that's something that we really, really look at as a seed stage investor. Sometimes we see founders that don't always have revenue. We always look at the growth of the active users, their stickiness, their churn rate, interaction. We have invested in pre-revenue companies that our users were growing like crazy. We went in and we helped them create revenue. So those three things are the generic response that all VCs would look at. Now, the under the table insider response, this is a little bit tricky. Depending on sort of where the fund is and who they raise their funding from, they might have a more strategic interest in certain markets or verticals than others. Nothing to do with your team or your product or your market, but there is something that obviously the investors will prioritize over the other. And this is, for example, for us right now, we want to talk to Korean founders, but the Korean founders that have an operating market in emerging markets. Why? Because in our fund, we have investors who are interested in emerging markets. So that's like an open secret for us. For other funds, it might be completely different. It might be the other way around. So very long-winded answer to the fact that we look at various things when we consider investment.
Hey, both types of answers. I love that you gave the additional one. So, an early stage entrepreneur has to hustle anywhere, any type of a company that they do. What is the difference? Because you're saying that your fund specifically you have a lot of investors that are interested in emerging markets. How are emerging markets different than markets like the US where you have operated in?
Yeah, so the concept of emerging market is very interesting, right? It's what is emerging market, right? So the most common indices that the investors as a whole look at is the MSCI Morgan Stanley Emerging Market Index, which actually, from a 20-year perspective, has performed better than the developed world index, and the world index. So it's like it's very kind of intuitive. If you're investing in a market, like emerging market, where macro is not as stable as, let's say, the United States, you're betting on the macro of a longer-term growth because there's 6 billion people who live in the emerging markets, right? And even though there's up and down like this every day, over time, there are variables that's going to just create because of a sheer size and growth rate. And that MSCI is, I think, a very interesting index to look at. Now, interestingly, the MSCI index also includes Korea, because two of the top 3 holdings includes SK Hynix and Samsung Electronics. So very interesting. Is Korea considered emerging market or not? You know?
I think you are better to answer that, but it surprised me nothing that you are definitely high up in the top with the companies there. And I think, well, that's the question where, what is an emerging market? Is that like a developing country? It doesn't have to be in a developing country. I think Korea falls in that because the growth that you guys are in the middle of is incredible.
Right. So I don't know if your question is like, should I talk about Korea as a particular example, or should I start overgeneralizing, or what we see in the fund?
Let's ask our audience. Do you want her to specify on Korea? Raise your hand. Or general. Okay, I think we're going to go general.
Let me
That's the luxury, guys, when we're a small audience. I'll take your opinion into account.
Overgeneralized. We do have over 20 countries across our portfolio. That being said, 50% of our portfolio is in Asia, including India, Pakistan, and around the area, right? We do have some in LATAM that we're starting to invest. Again, we have 8 companies in Korea. We have some in Middle East. So emerging market companies is actually a very interesting market, in my opinion, to work with. Because if you look at from a perspective of an American founder, you look at India, for example, and it's a very difficult market because of macro instability, political, security, crime rate, and everything, right? And poverty rate is high. But in fact, if you take a flip side of it, there is extremely big opportunities, right? And the most successful founders that we have worked with are just really overgeneralizing. They have picked a problem that is very, very fundamentally a problem. So for example, like an easy example is banking, right? There's 6 billion people out there, and over almost 90% of them are under or unbanked. Not just in India or Latin America, everywhere. And so in Korea, for example, banking is something that's very accessible. People were not able to pay for things just until recently, where QR codes have become a lot more. So you pick a very fundamental problem that from a developed market perspective, it's so obvious and necessary, but it is not available. So you don't even have to reinvent the wheel if you are from those markets with quote-unquote lack of infrastructure. You just have to see how you can give people access to that, not even that infrastructure, partial infrastructure. It opens a huge market, right? So the most successful entrepreneurs that we have seen over the past 10 years have taken this incremental innovation in an area where the pain is felt the most, and basically executed it. And so obviously there are a lot of hurdles, right? Lack of capital, difficult to find tech talent, and et cetera. Though the most interesting founders who have the most success in these market conditions pick the right problem, the right market, and were very tenacious about execution. So a lot of times, in these market conditions, you have no excuse. Because if you start making excuses, there's always excuses, right? Like, oh yeah, the road was closed. That's a great excuse, but it's not excused. So a lot of the most successful founders are able to tenaciously go through it with a lot of creativity to deliver. Whatever they can, they deliver. And sometimes it's very different in developed markets because we also invest in companies that come from US and Europe that operate in these market conditions. And it's a kind of a different dynamic because those markets are so sophisticated, you don't really have these ups and downs. So your kind of hustle is a little bit it's different than the ones that survive and scale in emerging market conditions. So I don't want to say that these infrastructure are not challenging. Emerging market infrastructure is not challenging, but it's very, very doable. And as an early stage investor, we try to figure out who are the real hustlers that can actually deliver no matter what the conditions are.
Then my question would be, and I don't want to go too deep into it because this lovely lady will be on the main stage later today on scaling, but I do want to touch upon it briefly. You're telling that the entrepreneurs that are focused on the emerging market, pick a problem that's relevant for that market. How focused are you as a fund that's focused on early stage startups in emerging markets, that the problem that they choose or the product that they create is scalable to other countries in a similar market? Is that something that because the problem with often is so local, how easy is it for these startups to scale, and how important is that for you as an investment
That's
fund?
a really great question, and sometimes I have the issue, to be really honest, when talking with Korean companies. It's not really it's not like Indonesia. It's definitely a lot more sophisticated market than Indonesia. But the Korean economy is big enough to have unicorns, but not big enough to have a super, over $100, $200 billion company. So I think everybody in Korea understands, just in a macro perspective, we need more global companies that come out from Korea to get to that level. But to go back to your original question, it's something that we consider number one criteria. So how scalable is this across the globe? And I actually have a lot of examples, right? It's very interesting because we began to see that just because you are either from an emerging market or you are operating in an emerging market doesn't mean that you're stuck there. Because I think a lot of the fears of either investors or founders of considering these markets is that, you will be stuck there because you're not in Silicon Valley. And we are trying to figure out, we're finding out, and it was our hypothesis, but it was proven that it's not always the case. So I'll give you a quick example. We invested in a clean tech company in Colombia. It's not the most common and popular markets in VC. It is a rising market. We invested in a company that started as a collector of used cooking oil of restaurant chains. But then they got so big that they started working directly with world, large-scale collectors of sort of recycling materials. And now with Phillips 66 and Shell, big energy companies, the energy companies started asking them, hey, I really want to have at collection traceability data for all of the stuff that you're giving us, because we submit this data to environmental agency in the US or the EU, and they give us tax credits, millions of dollars of tax credits. And so what these guys are doing is developing software that creates traceability across supply chain of all this recycling material that gets traded across the world as if it was gold or silver, right? And they give this data across the entire supply chain to big global companies. So this company is Colombian, but they have now clients in Texas, they have clients in London, they have clients outside of London. They have a client that's trying to, close a deal, obviously in Mexico, Colombia, obviously, but also in South Africa. That's one example. Another one is a very interesting company called ScaleX in Africa, this is also an early stage company. We invested pre-seed, but it's raising very soon Series A. So not like a scale up per se yet. But this company, turns fiat currency into, cryptocurrency for a lot of sort of African SME merchants where their macroeconomy is not stable. And so I know that, for example, working in emerging markets, some of the interesting things that we deal with is sort of high risk areas like cryptocurrency, where crypto is actually used for practical reasons that can help people overcome macro risks versus just gambling per se. So that company literally helps like thousands of SMEs and mom and pop shops in Africa to use sort of that a new banking system. So in emerging markets, I think, and I guess that those are two companies where you're born in emerging markets and sort of going across other emerging markets. And one last example, and there's many in this categories as well, are companies that are starting out from an emerging market, but they get so successful that they launch in soft land in developed markets. So one company is actually a Korean company, their portfolio called Tapitoon. They're a Series B plus company. They got funding from, it's a webtoon company that, vertically sort of integrated webtoon company and web content that distributes global content. And they're now number 2 in terms of global distribution of web comics and novel in the US and Europe. And now they have Southeast Asia and LATAM presence as well. And so there are lots and lots of examples of quote-unquote emerging market companies in early stage that from early onward go global. You don't have to wait until you're Series C to go global, right? So for us, from day one, we look at whether or not they have the ambition to, they have already operated, or they have plans to go global. And it's very possible, given our experience, and we felt it with our own skin.
I want to have her do a little work, because usually it's the startups that have to pitch and do all the work to get the funding. Luckily, I think everybody knows that capital is no longer just about capital, it's about smart capital. People just don't necessarily go with a VC or investor. They want to see what doors can they open, how can they help. So as an initially American fund, how are you relevant for your startups that you're investing in? Because Americans are very sales focused, very loud, very almost VC originated in Silicon Valley. So what is your strategy to connect to this Colombian fintech or this Korean company? How does Orbit add value as as an originally American born company?
So our legal structure as a fund is based in Delaware, but as a team we are not focused in the U.S. at all. In fact, we have 2 sister funds that are headquartered in San Francisco and New York, and those 2 funds focus mostly in the U.S. But as the emerging market arm, our teams actually, most of them are outside of the United States. In fact, there's a huge office in Shanghai, there's an office in Singapore, there's a team member in India, there's some in Middle East. We have 2 people, our teammate over there in Korea.
So a lot of local knowledge.
Yeah, right, exactly. And then I travel a lot to Latin America to do sourcing. So we do have a lot of local networks, right? Although when we add value or go into a cap table of a company, we always try to co-invest with the local investor. Because, we do have local contacts, but I think it's always the best complementary structure is that we go in with local investor who has a lot of local contacts, can generate a lot of local businesses, and we go in and we bring international benchmarks of a similar model that worked in another country, and international VC connections, because at some point you want to scale, and when you scale, you might want investors outside of your country, and because we are a global investor, we have a lot of friends that we can refer these deals to for subsequent funding. And also, we have a lot of corporate partners that are across the globe that can, once you reach a certain level and capacity, that we can basically help you close a pilot with a global corporation. So, we do add value that is very specific to a cross-border fund, but we also have a lot of the local network and team member presence.
Incredible. I'm going to look very kindly to Andrea because I always don't like to keep all the questions to myself, and I see somebody walking with a couple of mics. Can we take some audience questions? Anyone have a question for Stella that they want to ask? You have her right here in almost a private setting, so take your chance. And if not, I have a ton more. So,
do we have a shy audience today?
I'm Dutch. I know that I'm very direct, so I'm going to give you some thinking minutes. But if not, again, I will take the questions. But
actually, I'm very curious. Who are you in the audience are founders? Okay, we got 4 founders. Interesting. Who else are investors? Is anybody investor? Okay, who else is like a aspiring founder? Like you want to maybe potentially become one? Okay, very interesting. And who's like an ecosystem, like an accelerator? Oh, I see.
The South Summit team, of course.
South Summit team. Okay, very interesting. And for those who are actually currently founders, where are your operating markets? Would you consider them at some
just
point
yell at
in
us.
emerging
We have
markets?
very good ears. Where you operate? I saw some hands up there.
Oh, I see. Okay.
Fellow Dutchie, yes, love it.
Gotcha.
But operate globally, as we usually do, because our market is very, very tiny.
And those who are founders, how many of you would you consider yourself as early stage?
Okay.
Sort of seed and pre-seed stage? Oh, okay. And do you operate in emerging markets also? Okay. Well, would you like to tell us about your company?
Here you are.
Thank you so much, Stella and Annick, for the chance to speak. My name is Young, founder and CEO of DAY1. We are one of the finalists that will pitch tomorrow.
Congratulations.
Thank you. Currently, I'm based in Vietnam. The company is based in Singapore. We mainly operate in Southeast Asia, and we also have several clients in every corner of the world. I do have one question for you. From the traditional advice I got from most VC and ex-founders, it seems that most startup at early stage, they advise us to focus on a niche market before thinking of going to the global stage. But then in one of your speech, you mentioned that there are some countries, some tech ventures in emerging markets, they were so successful that they end up operating in other developed countries. Do you think it's conflicting to the traditional advice and focusing on the niche market? If not, then what will be your advice for startups who aspire to operating in a different markets than their own original setup?
So your question, if I understood correctly, is as an early stage company, should I focus first on one market and then scale, or try to look at different markets at the same time? Because sometimes you get feedback from investors that you're trying to do too much at the same time, right? Yeah. Okay. So that's actually a very relevant dilemma, and we deal with our portfolio companies all the time. And it's not like a clear-cut thing, right? Obviously, I think you need to have your first product market fit in one market or one client. Maybe that client is a global corporate. I don't know. But generally, you want to go beyond. You want to create one core product or service that's already, starting to have recurring revenue or recurring customers. And it's easier to have that sales and feedback process if you focus on one market or vertical, right? Once that core product is done, then you can start focusing, either you can do a little bit of like, okay, do I take this and then, go sort of, to different countries? In which case you want to be smart about it, right? Like you don't want to just go and knock on doors because it's very inefficient. You want to see what distribution channel or what partner can I use, because this product already works. I can tell. Where else can I apply to it? That's one. Number two is, sometimes your distributions are already so global because your first client or vertical was a lot of B2C companies, for example. They find it very easy to internationalize because the users come from different markets. In those cases, then once you get the one product line right, you launch more product lines that's more, revenue generating or easier to scale, right? But depending on where you are, you can adjust how to scale, right? You don't have to, it's not very clear cut. But the answer is that you don't want to have too many product lines going on at the same time. You want to have that one PMF, like product market fit, product or service, very well demonstrated. So when maybe you get your investor feedback saying that you're doing too much at the same time, maybe it's because they still don't believe that the traction you have for your main product is ripe enough for you to go globally or go have more service lines, right? Once you have that, the more application you have, the better. And you don't have to wait until you're a Series B company to do that. That's basically my point. But thanks for the question. That's a very important question.
And with that, we had absolutely perfect timing. Stella, I want to thank you so much for being with me on stage today. As said, this is just the start. Later today, I think about 5:30, you'll be on the main stage talking about scaling in emerging markets. So now we know how to start. Now, then you need to go and see, okay, how am I going to get the big bucks? But for now, thank you so much. Please give her a very big applause.
Thank you so much for having us here. Thank you.